I'm Caitlin Brophy with True South Real Estate, and we have Kaylee Foster with us today from Citibank, and she is our mortgage expert.
Thank you for having me.
And so we're gonna kind of have her talk on a few things that might interest you when you're looking to buy in this market. So the other day, Kaylee, we were kind of talking about some of the options that you guys have.
Sure.
And one of the ones that came up was a 3-2-1. And
Yeah.
we talked about how that would be good in this market with higher interest rates. Can you explain that a little bit more for us?
So a 3-2-1 is a temporary buy down option. We're gonna start at your qualifying rate, and it's basically a buy down by the seller in that the first year you get 3% off that initial rate, second year you get 2%, third year you get 1% off of that initial rate.
Great.
So it's a great way to get into a property at a lower interest rate.
Yeah, I hear lots of buyers talk about, well, the interest rates are too high, we're just gonna wait.
Mm-hmm.
But you know, the deal is right now, if you find the house, get in the house, and this is a great way for you to find the rate that works for you. And another question is during the 3-2-1, is there any penalties against the buyer for refinancing if they do see a rate that they want to stick to?
Great question. No, there is not a penalty. Actually, the seller credit would be credited towards your loan amount on the refinance. So you're actually having a lower loan amount at that time and
Great.
utilizing those points.
Great, so that would be a great way for. We are a resort town that has a lot of second homes, and so we just want to pick your brain on what are the second home options and what does that process look like?
Sure. So qualifying for a second home is very similar to if you're purchasing your primary. We're going to get an appraisal. We're going to need the same documentation. It's going to go to underwriting. We're going to get you to the closing table.
Love that, thank you. And what are any specific qualifications or requirements that may be needed for this specific type of loan?
The main difference would be the down payment. A down payment minimum on a second home is 10%.
Okay.
You are going to see some interest rate variances if you do put more down though.
Okay. Or investment property loans. So Kaylee, could you
Yeah.
explain a little bit on that, please?
Absolutely. So an investment property is one that you are planning on renting, whether it's short term, long term, month to month, year to year, whatever the case may be. You're going to be producing income from it.
So, are there any specific requirements or qualifications that a buyer would need to bring to you to qualify for an investment property loan?
Sure. So qualification is going to be very similar to that of a primary or second home application. The difference will be a down payment, minimum of 15% down is what we're typically going to see.
Okay, great. So that's not too bad. Is there anything else that you would like to tell us about qualifying for an investment property loan?
Sure. So a hot topic right now is DSCR loans. That is a debt service coverage ratio.
Oh, great.
And what that is we're going to get an appraisal. Within that appraisal, the appraiser is going to provide us with rental comparisons. And so we use that income, we look at what the mortgage payment would be, and if it's a 1-to-1 ratio or within that range, there's your loan.
Okay, so it's easy to qualify for those with the correct data.
Sure.
Okay, great.
I'm Marissa Good with True South Real Estate here in Ruidoso, New Mexico, and we have Kaylee Foster with Citibank with us today.
Thanks for having me.
Of course. We're going over some loan options and just some of the stuff that goes on in loan world. And one of the things that I wanted to know more about was manufactured home loans.
Sure.
So what's required as far as the home goes? Not so much the buyer, but the home. What's expected of the home?
Right. You hit a really good topic right there because the home does have to qualify on top of the borrower having to qualify. So what we're going to look at is we're going to make sure it's on a permanent foundation. That's going to be done through a foundation inspection by a certified engineer.
Is that usually a buyer or seller cost?
I've seen it go both ways.
Okay.
So really it's up to your negotiation.
Oh.
Yeah. So has to be built in or after 1978 and deactivated title with the county.
Okay. And do you guys do single wides or double wides?
I do both.
Okay.
Yes, ma'am.
Cool. Okay. And what are some things that we need to have the buyer prepared for when they are going to be purchasing a manufactured home?
Sure. So get applied. First step, your application in so I can look to make sure you qualify for a manufactured home. We do have conventional options, VA, FHA. They all have their own little quirks when it comes to manufactured homes, but more than happy to take your hand and walk you through it.
Cool. The other thing lately has been condos.
Mm.
You know, they're a little bit lower in price. People are kind of drawn to the low maintenance side of them. So tell us a little bit about that, because we know that sometimes they can be difficult.
They can get a little hairy at times. So when you're purchasing, we can do it as your primary, an investment, a second home. Any of those are an option. I am going to take a look at the structure of the HOA itself, and it puts condos into one of two categories, warrantable or non-warrantable.
Okay.
And what that boils down to is your down payment.
Okay.
So your down payment could be affected, whether it's 5% or 10% for a primary residence.
Okay.
So.
And I know in the past I've heard that, you know, how it's insured will kind of play into it too. So you guys look at all that.
We look at it all.
Okay.
Yes, ma'am.
Okay. Well, one thing I wanted to learn a little bit more about is portfolio loans. Can you tell us what that means and what that is?
Sure. So portfolio is a Citibank specific loan. It is Citibank money versus a conventional Fannie Freddie Mae product. So what this allows us is a little more, I'd like to say, leniency with our underwriting. We can apply a little more logic versus checking the boxes.
Okay, cool. Do a lot of people kind of do those?
Here lately we have seen an uptick in them. So not only can a portfolio loan be used for a purchase of a new home, whether it's second, investment, primary, that is also where we do lot loans, construction, purchase plus if you have a renovation loan. Those are other options that we provide.
Okay. What's the difference between a second home loan versus investment property loan?
Oh, that's a great question. I get that question quite a bit, especially here. So the main difference is the occupancy. If you are planning on living in the home any part, whether it's summer, winter, you're going to be in the home, that is considered a second or vacation home. If you're going to rent it full time, you're not going to have access to it, then it's going to be called an investment property.
Okay, all right, very interesting. Okay, and if somebody has a second home loan, are they still able to rent it out?
Sure, as long as they maintain access to be able to block time off for themselves, they can. They absolutely can. Just know that if we ever go to refinance or they go to qualify for another loan, if it's considered a second home, then we can't use that rental income to qualify.
Okay, all right, got it. Well, those are two very popular topics here in Ruidoso. We have a lot of people that want to buy investment properties or second homes. So if you have anybody or you are looking, please give us a call.